It is 1 a.m. here, and we have just seen a massive crash on Bitcoin. And my first thought is I need to do a video because I'm sure there's going to be a lot of people that are in fear, confused, thinking, what, how, why is this Bitcoin drop happening? Is it a good time to long? We have actually seen this crash on a Sunday evening, right? Before the CME's even open. So this is not usual. It's not often that we see this type of price action on a Sunday evening before the CME open, but it definitely is tradable. I just pray that you can listen super carefully to what I'll be sharing with you in this video. Of course, I'll be explaining, like, is now a good time to long? Like, just before the CME open, we're looking at that in around 1 hour's time. This video will be uploaded, before the CME open. So, is it good time to long now? What can we be looking at next? And I want to educate you of actually how I recognized this crash was going to be happening before it happened. This was, of course, all shared first and foremost in the members Discord of the champions. But nevertheless, I can show you this now so you can learn from it, so you can take advantage of the next big moves. So we'll go over a little bit of both, starting with this bit of price action, prior to the drop, and then we'll move on to what we're looking at next and why. The key thing there is why. I want to try and keep this one relatively short and sweet. Because of the time constrictions, I do want to trade the CME open in an hour. But as always, I will go on for as long as necessary to convey and get across the really important information that I share with you in these videos. So, picking up where we left off on Friday, right? Massive move to the upside, really, really, really big move to the upside. It was a strong, big move with the stocks. But Bitcoin just doing what Bitcoin does. I actually said this was before the big drop, by the way. I made a post saying, right, Bitcoin really is the most bearish bullish asset in the world. It's the most bearish bullish asset. Long term, yeah, Bitcoin is super bullish. But it is just so good to short, and then about an hour later, we got this massive dump. But I mean, it's like Bitcoin is very well known for these BART patterns, massive pumps, little bit of consolidation, give it all straight back. But I want to show you some things here that really led us to see that we were about to get this big drop to the downside. So first of all, we start off on some little intricate, small little details, such as bearish divergences. So again, this was posted yesterday. This was posted yesterday over on Twitter. Bearish divergences started to form on Bitcoin. Of course, we had a lot of euphoria on the pump. The single prints below will be key. So we're looking for a drop to the top of the single prints. That is what the next thing that's, showing us here, which will likely be happening. Of course, reminding you as well yesterday, do not get too bullish here, right? We've always got to be careful of these massive single green candle pumps. Nice pump, yes, but at the end of the day, it's into massive resistance. We were entering that 118K zone, massive resistance of the range point of control, not a play or not a place to FOMO buy, but to look for shorts, right? That's the one and the only trade that I was looking for, was these short trades. Again, this was all posted 23rd of August, yesterday, reminding you got to look for these places to short trades. I know a lot of people are on the opposite, right? They're seeing the massive pump to the upside. And again, you don't want to just randomly short. You got to remain patient for that actual good entry trigger. But that's the one and only trade that we were looking for. And, Bitcoin really is the most bearish, bullish asset in the world. I am long-term bullish on Bitcoin, but I love to short it. Why? Because it is these shorts that give these massive profits time and time and time again. For traders, you need to be very comfortable shorting this asset because truly, I mean that. You might not fully understand that. You might think, well, Daniel, surely the money is made longing or buying spot. No, I really mean it. Like shorting this asset, you get paid funding every 8 hours. The market just has several big pullbacks continuous. Most bullish bearish asset in the world. Anyway, you can think on that at your own time. Let's go back over to the charts. I want to just spend real quick 2 minutes here. I'll be very transparent and honest with you. I will show you every post that I've made over the past few days, just so you can see with full transparency what we were looking at before this drop to the downside. So this is the key thing. Of course, now I'm going over it after it's happened, but this is not hindsight. Why? Because it was all given in advance to the members in the Champions Discord. So let's start off here the last few days very quickly. We'll go quick fire round. So again, saying here, don't get too excited. We could easily go down and make new lows. We're at the big resistance. This is not a place to be bullish. Okay, the only setup I'm waiting here for is for a short trade. Bitcoin, I'm going to be waiting nice and patiently for the short trade setup. You see, not once am I looking for longs here on Bitcoin, but I'm waiting for those shorts to form. We had EXO missing data, but no surprise there. That's why we're using Atus. On Atus, we actually saw then what was forming bearish divergences. So you see here, we're forming the lower highs on price. We're forming the higher highs on the CVD. That is bearish divergences, right? So really simple, lower high. You see here, higher highs forming. This is forming our bearish CVD divergences. This is while we're around $115,800. What's going to be key is the single prints below us, right? So we had the confluence with the anchored VWAP, this single prints. We've got to see if we got the acceptance here on the single prints. Okay, that was yesterday AM. What we move on to next, well, the bearish divergences started to play out. I'm still just going to remain patient for the top of the single prints. The top of the single prints for me was key, whether they hold us support or we get acceptance. The first thing I tell my team this morning is we've got the acceptance into the single prints. Now the target is a move down to $113,000. So we're trading at $115,000. So for me, this is real simple stuff. I just want you to understand this because it's a little bit complex, I suppose, but it's not overly difficult. We had the high put in. Okay, we put in the high at 7 p.m. UK time, so 7 p.m. I was making actually a video I made a video around 4 or 5 p.m. during this section of the move, right? We were at this point, I was not in any shorts. We had to remain patient. We ended up making another new high, which could have been an aggressive short trade on a little bit of a fake out of the high. That could have been a short trade. Or you could have waited for what I would class as a very high probability short trade setup, which was, well, like we saw with the acceptance into the single prints. At this point, you've got a short trade. Your invalidation, I even give, on top of this, by the way, you then were forming bearish CVD divergences. So just, this is what I mean. Like, this is a super high probability trade setup. You've got the acceptance in the single prints. You've then, of course, lost that anchored VWAP of the uptrend, which should have been support, was lost. And then it's resistance. So you've got resistance of the uptrend anchored VWAP. You've got the acceptance into the single prints. And then you've got the bearish CVD divergences forming with open interest increases of new longs. This is just lining up for essentially like a long squeeze. All of these like silly bulls, we could call them, getting euphoric on the pump. Well, you know, well, I don't know why they're getting euphoric on the pump, but the single prints were the key. We got acceptance into the single prints. That gives us a short trade setup. But again, not just one thing there. You have 3 different confluences to short, the bearish CVD divergences, and then the invalidation, right? This is key. Where is the stop loss on the shorts? I've already said that's the target now. For me, the target is 113.5. Again, at the time, we're trading $115,000. So that's the short trade. That's the target. What's the next step? The invalidation, the stop loss. I go on to tell my team that is where, the champion members, that is where the invalidation is, which is the top of the daily high. This is our invalidation of the stop loss, right? That's that's going to invalidate our short trade setup of filling the single prints. Then go on to say this very important bit of information, which is the good thing is about our target at 113.5 thousand is the confluence is very small. All it is the top of the single prints, right? That's who wants to long that level? Nobody, because it's an awful support level. You know, but it is the target of our short, but it's an awful support level. So going on top of that, I say this is going to be ending in a much larger crash because it is very likely that it fails as support. All right, so just think about this. We had to remain patient for the single prints. We got the acceptance into the single prints. That gives us a short trade with a $113,000 official target. But then on top of that, we know that that target is very likely going to fail as support, and thus we get a much larger, quick crash to the downside. So we've got the target. It's going to look like this. Here we are. Like, this was a very, very good trade. And it's one that you can replicate. That's why I'm teaching you it here, because it's one you can replicate. You wait for the single prints. You get the acceptance into the single prints. Your invalidation, the daily high. Your target, 113.5. Standard 2-to-1 risk reward ratio. But again, this is the key here. We are very likely going to fail that support and get a much larger crash to the downside. So where's your target? Well, daily naked point of control, fake out of the week low. This is a very acceptable target. This is a very, very, very acceptable target indeed. Of course, you control this down. In my opinion, still looking down towards $108,000. So like this trade that you got given here, I just want to say, like, did you need to short? Again, you could have shorted the exact high, right? That was a potential short if you were very aggressive. But I do not think that this was a massive probability short trade, but you could have taken it, of course. Congratulations. But this bit of price action here was where you got very high probability. Acceptance into the single prints, loss of the uptrend anchored VWAP back into resistance, bearish divergences forming, and then the understanding that, well, the single print, the single print acceptance is going to lead to at least 113.5, but then that support really is likely to fail as a support. Thus, we get a much larger crash. Like, all come through very, very, very perfectly. And then you can see here the post 6:30 in the evening. Just want to emphasize this because the crash happened at 8:30, so 2 hours later. Just saying to my team, like, literally, this is just so good to short. I love shorting Bitcoin. And then look at that, 2 hours later, what happened? The biggest crash you could have ever imagined, falling off the top of the world. Like, I just look at that. I mean, this is why you've got to be on your toes. You've got to be on your toes, right? I longed on Friday. This is why I was emphasizing so much the importance of taking profits. Take profits, right? You cannot see these massive pumps to the upside and just think, oh yeah, this is so good, I'm so happy, I'm just going to keep on holding on to the long. No, like I was saying, the one and only trade that we were looking for, right? The one and only trade that we were looking for was the shorts. We were ready and waiting for those shorts yesterday. Even though it was a massive pump, we're only looking for those short trades. We had to wait for the setup. We got the setup, see if the acceptance, we got the acceptance. That gives us the short, it gives us the target. We understand the bigger crash. It played out very nicely. And again, that is not hindsight. It was all given in advance before the crash, explaining the thought process there. And I hope that in this YouTube video here, you can, again, the information is you cannot use it to trade because the trade's already gone. If you want the information to trade off of, well, chartchampions.com. You could have had that information, you could have understood it, you could have traded it, you could have entered a lovely short and made wonderful profits on this crash. But here on YouTube, I hope that you can just have listened, understood, and you can use that same theory in your next trade, because it is a wonderful trade theory and setup. So, well, with that said then, we're going to start to move on to what we are looking at next. So we have just saw a wonderful move to the downside. We have hit into the daily naked point of control. Finally, we missed it back on the 3rd of August. So of course, we missed it again then on the 22nd of August, ending in a bit of a swing failure pattern. That was an acceptable long trade. Again, that was a profitable trade. There's no way that wasn't a profitable trade. But now, of course, we've finally hit that daily naked point of control. What I would say is, well, let's take a look together. Our CME gap, our close on the CME. We're actually going to be looking for our CME. Wow, look at this. We are going to be looking at a massive CME gap today. So again, we have not opened yet. We're looking at around another 50 minutes. So 49 minutes, 50 seconds. We're going to open our CME around here. Again, this could change over the next 50 minutes. But let's just say, fast forward, we're going to see it here. Well, we're going to have a massive CME gap. And I've said this in previous videos over the past few weeks. It's very likely that that CME gap gets filled, right? Remember this? We had this. Here we go. Wonderful example. Big CME gap to the upside. Again, yeah, wonderful. Wonderful, right? CME gap. Well, we know that this is very likely to be filled. But what would I say? We do not need to fill it straight away. So what do we do here? We got the CME gap. We got a bit of a continuation. Then what did we do? We back tested this as a support. And what did we do next? We moved on to where? All-time highs. And this is why, if you listen to my last video, I was saying I still hold that short trade open. Even though we were getting this pump to the upside, I'm not closing this short. There was zero reason to close the shorts. And then look what happens next. Massive drop to that. That's why I do not close my shorts unless there's a sign of strength. Yes, this rally was nice. It was profitable. I did long it, but I took my profits. Why? Because this was a rally into resistance. There was no sign of strength on the rally. That's why I was very, much emphasizing I'm still keeping this short trade open. Until there's strength, I'm not going to close it. And of course, the only way you could have got the strength is on a reclaim of 118k on that range point of control. And that's why I was saying, range point of control is very key here. You never got above it, so there was never strength. And of course, you've seen another move to the downside. So there you go. But anyway, we're going to, going back to this. So again, it's very likely that this CME gap got filled, but it did not happen straight away, right? We got another rally. We back tested it as support, all-time highs, before we eventually came down and filled the gap. And that's what we've been seeing recently. We've not seen the gaps getting filled, instantly. So here is another example. You can see you open the CME. Well, here you've done a little bit of a rise to the upside, so not an instant pullback, but you would have come up here, taken out previous highs, and then eventually you came down and you got the fill. So you can just go back and spend some time doing these types of things. Again, here is another one, right? You had a big gap to the upside, but it took a long time, right? But eventually, you come down and you filled the gap, and then look at that, you rallied where to? New all-time highs. So these gaps are super important, and they are very likely to be filled, but it's just this, they do not need to be filled straight away. So what I would be saying is here, yeah, we're going to have a massive gap. And again, this gap is very likely to be filled. It is very likely that we trade above $117,000 again. But what I would say is we need to actually see, we need to see basically the strength. So, of course, there's two scenarios, as there always is. Number one is that we just literally go up and we fill the gap and we get a strong reversal. I think that's a bit of the easy card here. The easy card. Again, I'm happy to play the easy cards. Just like that swing failure pattern, this was a pretty easy card, right? It was a very easy long trade, massive pump, profits. Of course, it gave it all back in the end, but it was still a very easy swing failure pattern long. So I kind of feel the same here, right? It's going to be a little bit easy if we just reverse all the way up, right? It can happen as the swing failure pattern. It seems a little bit easy. So what I would say here is what's very key, and you are going to have to look at this yourself. So I hope that you have a good understanding of the charts because it's another 46 minutes away. When we open this CME, I think it's likely that we get a little bit of a pullback first. So we're going to have to be monitoring, much like we were monitoring yesterday, see if acceptance or not. So just like we had to see acceptance into the gap, into the single prints, we got the acceptance. So that gave us the short trade for the other side of the single prints. Well, we can play the gap the same. So I believe that we will get a little pullback first of all. Well, then we can see one of two things. That gap holds as resistance, and then we're looking down towards $108,000. Fine, happy with that. But we need to be aware of both scenarios, right? The alternate scenario is if we get the acceptance into the gap, well, that's when we can look for the gap fill. So for me, that is really crucial. And I would not look at the acceptance in the first really 12 hours. I would give this until tomorrow morning. Would not be looking to trade this acceptance personally until London open tomorrow. So I would wait 12 hours-ish, right? So we're going to be waiting till around London open tomorrow. And that's where I will have a much better idea of have we seen acceptance. The problem with looking at acceptance straight away on the CME Open is that we have to just acknowledge it is a Sunday evening. Yeah, the CME is just open, but again, I can only go off of data and statistics, but it is not likely that we have high volume. And so I do not like really calling acceptance too quickly, and I mean within the first 30 minutes when the volume is low. So again, this is why you have to have a good understanding of order flow. And I will just show you this, by the way, because ExoChart, I still have a sub here until it expires. But you just look at this. For people that are wondering, look at the ExoCharts are missing data. This is what I mean. How's anybody trusting ExoCharts data? There's just it's literally missing data. This is real time showing you like missing data. And that's why I refer back to this tweet the other day. Right, it was missing. Anyway, what I'm saying with this is be careful with the places that you're looking. Here you go. Yeah, look, it was missing a load of data on it. Just seems to be a little bit broken. But I did see this comment. Yeah. Anyway, I'm not going to digress on this anymore. But all I'm saying is, yeah, make sure you're looking at data which is going to be correct. Anyway. You got to see how much volume there is on the open. I imagine it's going to be low. Thus, I would say it's kind of beneficial to wait till London open tomorrow, where we're going to see higher volume start to come in. And that's where we can start to look at for those acceptance. So my kind of tip right now, 43 minutes before CME is, to take a little bit of a step back. I wouldn't want to be super aggressive right now on a long or a short trade here. Again, if you longed the daily naked point of control at the low, you've got nothing else to do apart from remain in that long trade. Like if you longed the naked point of control, congratulations. Like, you don't need to close that long trade. But if you missed the daily naked point of control long here at 117, 112.7, I wouldn't be wanting to take a long or a short here, because I would call that as a gamble. I would say this is a total gamble to long or short here. Again, if you longed the daily naked point of control, there's no reason to close the trade. But I would say that there is a likely probability to come down and fill that wick. So come down and fill this wick. But there's just as likely probability, right, to just see that CME open and get the full reversal on the CME. So that's what I call a gamble trade. You know, that's not what I like to do. I am a very, very big fan of saying be patient, wait for the good setups, wait for at least 3 confluences. You know, like you saw here, this was a very high probability setup. But here, what we're trading, where's our divergences? Where's our volume? Where is our risk to rewards coming in here? You know, just to emphasize this, you know, where's our stop loss, right? Where is our target going to be, right? Top of the pump, like, you know, just what. You can see I'm lost for words, and I'm lost for words because I'm just thinking, what is this trade? You know, whereas when you give me a high probability trade, I could talk about this for hours. Or this is exactly why we shorted acceptance into the single prints. Whereas our invalidation above the high, whereas our target, a big crash down to the downside to fill those single prints, right? The very least it was a 2-to-1 risk to reward ratio, but we knew the higher probability of a crash. And so, you know, this is something I can talk about. This is something I can get behind. Here, trading here, No. Stop taking bad trades. Stop forcing trades. Stop trading out of fear. Stop revenge trading. Stop taking stupid trades. Print it out, write it on your computer. Stop taking stupid trades. That's how you lose all your money. You lose everything by taking stupid trades. And I know people are going to be taking these stupid trades. Okay, and I really am very passionate about that. Stop it. Have some control. Take a deep breath. If you need, go for a walk. Come back and wait for the high probabilities. Those 3 confluences. Look at the order flow. Trade like a champion. And instead of being the guy, like I said at the start of the video, why I had to make this, they're confused. Why is this happening? Oh my God, I'm wrecked. Oh my God, I didn't take any take profits on my long. Oh my God, I missed the short. Yeah, this is the people that are taking the stupid trades. But guess what? You do not need to be like that. If you listen carefully, if you really want to learn, well, we have the secret sauce. That is logged in here, chartchampions.com. Everything that you need is here in a one-stop shop. We got the educational library, daily live streams. Tomorrow I'll be going through a swing trading plan. Truly, it's just your one-stop shop for all of your trading needs. So if you want to be ahead of the game, ahead of the curve, ahead of those drops, getting the best shorts. On Friday, I'll end with this. I'm always so bad at ending these videos, but this is a good one. This is a good one. Where was that comment? Where was that comment? Because I loved it. I loved it. Oh yeah, I'll be forever a bear. Someone said I'm forever a bear because I was saying that we're going to get a drop to the downside. I'm only looking for... And by the way, forever a bear, I played out pretty well, right? Played out pretty well. But, you know, this was on the top of the pump and I'm telling people, look for the shorts. But then this is my reply. Okay, this was my reply. Forever a bear. I longed the exact low of the swing failure pattern on Friday. Now I'm looking for the shorts, right? So I'm not a bull or a bear. I'm just a whale who extracts so much money out of this market because I will play with whatever direction is giving the highest probability. Swing failure pattern at the low, I'm taking the long. We get the acceptance into the single prints with bearish divergences, I'm taking the short. I'm just trading the best and highest probability trades. I'm not taking those stupid random trades. I'm taking the best. I'm a champ, and you can be too. Join the winning team, enjoy it, and yeah, be ahead of the curve. Cheers, everybody. Hope you've enjoyed. And that's me signing out. Thank you and goodbye.